Welcome back. What a strange housing market we have right now. So for example, there's approximately 600,000 fewer houses for sale nationwide in the US this June compared to the average June in 2017 through 2019. This is because approximately 92% of US homeowners have rates of less than 6% and 82% are holding on to a rate of less than 5%. This is well below today's rates of around 7%, which is why the number of new listings fell by nearly 28% this June compared to pre-COVID levels. Houses are also taking longer to sell compared to the past couple of years, but they're still selling faster on average compared to historical averages. So in today's video, I'm going to share a new report from Realtor.com which covers the entire month of June. This is actually really great because other companies such as the National Association of Realtors won't publish June's numbers until July 20th, approximately 3 weeks after Realtor.com's report was announced. With that said, I have a lot to cover in today's video. Of course, if you guys get any value out of this video whatsoever, then please hit the like button. I greatly appreciate that. Also consider subscribing as well. I post frequent housing market updates so you guys can be more informed. Let's go ahead and dive right in. According to Realtor.com's June's housing data, it says here the growth of inventory, in other words, the growth rate in the number of houses for sale nationwide, actually slowed nationally and decreased in many metro areas across the United States. And by the way, stay tuned for the end of this video because I'm going to provide the cities or the metros in which home prices have decreased the most, also the areas in which home prices have increased the most. I'm also going to share the changes regarding new listings as well as housing inventory. Some very big changes across the United States here. In regards to home prices, it says here, while the median asking price home grew seasonally, so in other words, asking prices tend to increase each and every June, we saw the first year-over-year decrease in the median list price dating back to 2017. So in comparing asking prices compared to June 2022, they're actually down. I believe down by about 0.9%, just going by my memory here, but they still increased compared to May though. Additionally, the median list price per square foot continued to decrease year over year for the second month in a row. So asking prices per square foot have now decreased for the second month in a row. They also dive deeper regarding inventory levels going back to 2017 here. It says there were 7.1% more house for sale this June compared to last June. This means there was approximately 41,000 more homes for sale compared to the same time frame 1 year ago. However, though, the inventory growth rate for houses actively for sale has started to decrease for the fourth month in a row. So even though we have more houses for sale compared to last year, that growth rate has been actually going down. In fact, in the final week of June, they noted that inventory levels actually decreased on a year-over-year basis for the first time since last April. This, of course, is driven by fewer people opting to sell their houses, given the fact they have rates of well below current rates of around 7% right now. Here's a chart showing inventory levels this year going back to 2017. So here is 2023. In gold right here is 2022, last year. And in green is 2021. 2020, I'm pretty much going to ignore given the fact that the housing market was completely abnormal in June 2020. But here's pre-pandemic levels. 2017 in red's 2019, and in orange is 2018. So for the month of June, there was just under 614,000 homes for sale, even though that's 7.1% higher compared to the same time frame in 2022 and also higher compared to 2021. It's still well below historical averages going back to 2017. I should say the average period in 2017 through 2019, because back then there was around 1.2 million homes for sale. Now there's only about 614,000. So by my dumb math, that's a decrease of around 49%. So there's approximately 49% fewer homes for sale this June compared to the average June, looking back at pre-pandemic levels. And of course, one of the main reasons why we're seeing historical low inventory levels is because a lot of people are not selling their houses, right? It talks about here about how in May that home selling sentiment as measured by Fannie Mae that actually increased for the third month in a row. It's important to note though that even though housing sentiment has increased for 3 consecutive months, according to Fannie Mae, that has not translated into more new listings. In fact, it's just the opposite because new listings actually decreased by 25.7% compared to the same time last year. And also new listings remain 27.6% below pre-pandemic levels in 2017 to 2019. Here's a chart showing new listings, which of course is a measure of the number of homeowners who are listing their houses for sale. Because this June, there's around 400,000 new listings for the entire month nationwide. That's a decrease of 25.7% compared to 2022, which is right here. So right now at around, let's call it 400,000 new listings. This is well below pre-pandemic levels when on average, we should be seeing around 550,000. This means we're missing approximately 150,000 fewer houses that got listed for sale compared to historical averages. So we're missing approximately 150,000 houses that should have been listed, but they have not. And that's one reason why we're seeing very low inventory levels for existing houses. As I always say, every real estate market is different though, right? So regarding the number of homes for sale or housing inventory, the southern region saw the most growth in the number of homes for sale, an increase of 24.1% compared to June of 2022. However, though, inventory in the south is still down by about 41% from pre-pandemic levels. Additionally, at the metro level, which by the way, Realtor.com looks at the 50 most populous metros nationwide. So inventory decrease, or the number of houses for sale, decreased in 28 out of the 50 most populous metros compared to June 2022. However, some southern metros saw significant growth rates of inventory levels. So for example, in San Antonio, Texas, inventory level increased by 65.7% year over year. Nashville saw a gain of 65.53.3%. 65.53. That's funny. Let's just assume 65%. Decrease, I just noticed that. All right, a decrease of 65% in Nashville. Sorry, an increase of 65% in Nashville. New Orleans saw a gain of 60%. Despite high inventory levels, I can't go over that. Anyways, I never seen a percentage that had 2 decimal points. Anyways, despite high inventory growth compared to last year, most southern metros still had a lower level of inventory compared to pre-pandemic levels. So even though inventory has been increasing by more than 60% or more than 65.53.3%, these growth rates are still well below pre-pandemic levels here, or the number of houses for sale. In fact, among the 50 largest metro areas, only Austin, Texas, which saw a gain of 5%, saw higher levels in the number of houses for sale compared to what's typical during 2017 to 2019. So, taking a step back here, at the 50 largest metros, there's only one metro that had more inventory or more homes for sale compared to pre-pandemic levels, and that was Austin, Texas, a gain of 5%. Also this June, not a single metro saw an increase of new listings year over year. Western markets reported the largest yearly decreases, including Phoenix down by nearly 48%, Seattle, Washington decreased by 37%, and San Diego fell by nearly 37% as well. So every single one of the metros reported a decrease of new listings. Not only are we seeing a decrease in the number of houses being listed for sale, of course, we're seeing a huge decrease of home buying demand as well. So the number of houses that went under contract, a measure of contracts being signed between buyers and sellers or accepted offers or pending home sales, decreased by 16.7% compared to the same time frame 12 months ago. This, however, is much improved from December's decrease, down by nearly 37% compared to December of 2021. Okay, let me share a chart showing pending home sales going back to 2017. This is quite messy, but 2021 is at the top right here. Here's 2020 in light blue, greenish. Gold is 2022. Everything else is this year or pre-pandemic levels. So the number of pending home sales is around 453,000, on par with 2017 to 2019, but still down by about 17% from last year and well below 2021 as well as 2020 as well. Now here's another very interesting trend as well regarding how fast or how slow houses are selling right now. So it says here on average it took about 44 days to sell a house this June, which is almost 2 weeks longer compared to June of 2022. However, though, it's still 10 days faster compared to pre-COVID levels. In other words, in most areas, the housing market continues to move much faster compared to pre-pandemic era, despite significant slowing from the frenzied pace we have over the past several years here. So here's a look at the number of or days in the market, and that's right here. Days in the market, it took about 44 days. That's 13 days longer compared to 2022, which, by the way, back in May, we had nearly an all-time record lows regarding how fast houses were selling. So anyways, at 44 days back in 2022 this time, it took about, 31 days, but still at 44 days, this is still faster by about 10 days, historically speaking. In regards to asking prices here, asking prices actually increased very slightly this June to $445,000 on a national level. It's still down from the all-time record highs though that was set 1 year ago back in June 2022 when the all-time record high was $449,000. So asking prices decreased by 0.9% year over year, the first time this has happened in at least 2017 as far back as Realtor.com's data goes. This is what it looks like going back to 2017 though. So asking prices down by 0.9% from 2022, the all-time record high, but a slight increase compared to May, but still down compared to 1 year ago. Also compared to 2017 to 2019 though, it's still down or still up greatly though, because back in 2019 this time, the median asking price was only about $320,000. Now it's at $445,000. This means asking prices on average have increased by about 39% compared to June of 2019. So big picture here, it's nice to see that asking prices decreased by 0.9% year over year if you guys are looking to buy a house. However, though, compared to pre-pandemic levels, it's still up by nearly 40%. Okay, let me first share a summary of each of the 4 major regions in the US and also share how that compares to pre-pandemic levels. And then I'll share some metros, which I found to be very interesting regarding the biggest increases in prices, biggest decreases, and also changes regarding inventory levels as well. So here's what it looks like regarding each of these 4 major regions: the Midwest, the Northeast, the South, and the West. So active listing count, this is the number of houses for sale, decreased by more than 5% in each of these regions except for the South. The South increased by 24% versus the 21% decrease in the West. Also regarding new listings fell by more than 23% for each of these 4 major regions, a very big contributor regarding the decrease of active listings. In regards to asking prices, they actually increased the least in the South, only a gain of 1.5% versus the 11.7% increase in the Northeast. Meanwhile, it took about 15 days longer to sell a house in the South versus only a 6-day difference in the Midwest and also a 7-day increase in the Northeast. Now, when looking at these numbers this June compared to the average June in 2017, 18, and 19, the numbers are drastically different here. active listing count compared to pre-pandemic levels have decreased by more than 40%. The biggest decrease is actually in the Northeast, down by nearly 62%. The West fell by 42.1%. So approximately 42% fewer homes for sale compared to pre-COVID levels in the West. New listings also fell by more than 20%. The biggest decrease was actually in the Northeast, falling by nearly 33% right here. Asking prices increased by more than 30%. The biggest gain was actually in the West, increasing by almost 40%. Regarding how fast or how slow houses are selling compared to pre-pandemic levels here, in the West, it's actually taking 1 day longer compared to historical averages, which is much different compared to the Midwest. It's taking 8 days faster compared to the pre-pandemic levels, and also 13 days faster in the Northeast and 9 days faster in the South. Realtor.com also provided the snapshot for each of the 50 largest metros as well. So in the greater Austin, Texas area, asking prices decreased by 6.8% year over year. This is actually the biggest decrease of asking prices nationwide among these 50 metros that Realtor.com tracked, down by 6.8%. In contrast, in Cincinnati, Ohio, asking prices increased the most at these 50 metros, a giant increase of 20%. In regards to the number of houses for sale, again, some very big changes as well. So for example, in the greater San Antonio, Texas market, inventory is actually an increase of 65.7%, the biggest increase of inventory levels nationwide at these 50 largest metros here. The biggest decrease was actually in San Jose, Sunnyvale area, a decrease of 44.1% compared to June 2022. Something that's really mind-blowing regarding these trends right here is the number of new listings compared to 12 months ago. Every single one of the 50 largest metros posted a decrease on a year-over-year basis. So we're not just talking about one metro that we're seeing a huge decrease of new listings. It's across the entire United States here. As you can see right here, I'm just going to scroll down. Most of these metros have decreased by more than 20%. Los Angeles decreased by nearly 31%. Minneapolis, the greater Minneapolis area, down by a 17.8%. That actually is the metro that actually fell the least. So all these metros fell by at least 17.8%. The biggest decrease, in fact, was in the Phoenix area, down by nearly 48% in the number of new listings. I also want to give you guys my opinion regarding the number of new listings because that has become a bigger and bigger problem, which is causing inventory levels to remain at very low levels, which of course is supporting home prices, right? So in my personal opinion, the only way we're going to see a giant surge of new listings if mortgage rates fall to less than 5%. If rates were to fall to less than 5%, that would entice some homeowners who have rates around that to sell their houses. That'd be number one. Number two would be a giant spike of unemployment in which people do not have any reserves and they're forced to sell their houses. So those two factors we're not seeing, of course, because average rates today are around 7%. And of course, unemployment rates still remain at very, very low levels. So what do you guys think about that theory? Please leave me a comment below. Of course, I appreciate you guys for watching today's video and of course, for supporting my YouTube channel. Hope you guys have an awesome day. I look forward to seeing you on the next video.